Doug Shoemaker and Sam.
Hello again.
Back with USA Mortgage, the Shoemaker Loan Team, and Sam and I were sitting talking again. We've been doing this a lot lately, and she's been really helping me kind of get a gauge on what are some of the misconceptions out there. Like, you know, what do people think about the loan process and what's the reality? So, Sam, you had a really interesting question you just asked me a minute ago. You want to let everybody know what it was we were talking about?
Yeah, so here on The Office, if you've seen some of our previous videos, I knew pretty much nothing when I came on here, and so I just hear a lot of terms tossed around. And something I was really curious about is you hear these words like, you know, earnest money, closing costs, paying for an appraisal. And so I'm just wondering, what does it actually cost to buy a home? Because you see the price tag and you like put in an offer, but there's all these other little things it seems. So what all goes into that, and what actual money am I going to be putting down to buy a home?
So that's a really awesome question, by the way. And unfortunately, there's a lot of different loan programs out there. So a lot of it depends on the type of loan that you do. Some of the common things that we hear are, well, especially from first-time home buyers, like, wow, I really didn't think I could afford to buy a house. But so your closing costs in general, number one, there's more than just closing costs. You have what's called closing costs, and then you have what's called prepaid items. And kind of the difference between the two are closing costs are pretty much loan related, and prepaid items are, like, a lot of people don't realize this until they buy a home. Your homeowner's insurance, which is what is going to protect you in the event there's a fire or a tree falls on the house or something like that, as part of the loan process, most of the time, you're going to be required to pay a full year of homeowner's insurance up front. Now, by upfront, I don't mean you have to pay for it when you start the loan process.
Okay.
But whenever we come to closing, that final figure, that amount of the cashier's check that you've got to bring to the closing, it's part of that. So there's a full year of homeowner's insurance that you pay as part of that number. But there's also 2 or 3 months worth of homeowner's insurance that have to go into your escrow account. I don't want to get too detailed and get too confusing, but because of the fact that, you know, let's say if you were buying your home in September, your first payment most likely wouldn't be until November. So when you make your November payment, you're paying the principal and interest that accrued the month prior, okay? So the month that you buy your home, you're gonna, you know, have your prepaid interest that you've got to pay for whatever number of days remain. You're gonna have all your other closing costs that you've got to pay. But the reason there's a difference there is because you bought your home in September. Well, if you don't start putting money in your escrow account until November, you've got September and October that you didn't put any money in your escrow account. So a year later, when we go to pay your homeowner's insurance for you, we want to pay another whole year. Well, but you lived there for 2 months and didn't put any money in escrow. So that's one of the reasons that you have that extra 2 or 3 months that you're going to put in your escrow account. Can be really confusing, right?
Yeah, a little bit.
One of the reasons it's so important to call somebody who does this. We've been doing this for 25 years, and we'll walk you through it and try to make it as, you know, least confusing as possible. But that's what's considered a prepaid item. That's something you're prepaying that item up front. So closing costs would be the origination charge to the lender. It would be title company fees that you have that will be called a settlement agent or a title company. But the two together is what makes everything up. So the big difference is, are you paying all this yourself? Or are we going to negotiate that the seller pays some of this for you? Which is very, very common. Now, in a market that's as hot as ours is right now, if you're going to negotiate that the seller pay your closing costs, you might be coming in right at, you know, the sale price that they're asking. In some markets, you might even have to pay above asking price in order to get them to pay your closing costs, because the market's really, really hot. But you know, closing costs themselves are usually $2,500 to $3,000, but then you might have $1,000 or so on top of that for your prepaid items. Now, whether you're buying in Missouri or Illinois, that can make a really big difference too, because the taxes in Illinois are a year behind. And it causes all kinds of goofy stuff that we'll do another video for you that we'll link down below. That explains tax prorations and seller tax credits and all that kind of stuff, because in Illinois it can get really, really confusing. Missouri's a little bit easier, but guys and girls, I'm going to tell you that's one of the reasons it's so important that you don't use like online payment calculators, because the online payment calculators, they really aren't good at understanding whether there's seller tax prorations, whether there's the taxes are a year behind or not. They're really not good at knowing the local market in terms of what are homeowners insurance rates, that kind of thing. So it's just one more reason why it's really, really important that you work with a local lender that's been in the market for a very long time, that knows a lot of people, homeowners insurance agents, that kind of thing. Because I will tell you, as part of your costs with your loan, your homeowners insurance is very, very similar in terms of cost to what kind of rate can I get. Because if you go somewhere that's got an 8% lower rate, but they're kind of one of these 1-800-cheap-loan-no-service.com places, and they don't care enough to hook you up with somebody, a local homeowners insurance agent that's got really amazing rates, man, an 1/8% in rate might be $7 a month on your payment, where we might be able to save you $25 a month in your homeowners insurance by working with one of our preferred insurance agents.
That's cool.
Does that help?
Yeah, definitely.
What other questions you have?
So what exactly does closing costs cover? What are the costs for closing?
So a handful of things. One of the first ones is the loan origination charge, and that's basically the charge to the bank, the mortgage bank that's originating the loan for you. And in our market, we see that charge range anywhere from $800 all the way up to $2,000, $3,000, $4,000, depending on who you work with. We're generally around that $1,000, $1,200 range, so kind of the low end of what that can be. But again, it's really important that you understand that piece, because when you're shopping online or when you're getting some of these offers in the mail, first of all, the first thing that happens when you apply for a mortgage is your information gets sold to a bunch of people. It's called a credit trigger. So all of a sudden you start getting all these mortgage offers from all these people, and you really want to be careful, because there's a lot of these 1-800, no service, cheaploan.coms that all they'll do is tell you the rate. And so what if they were charging you a 2 or 3% origination charge? On a $100,000 house, that's $2,000 or $3,000. On a $200,000 house, that's $4,000 or $6,000. So even though their rate might be lower, their APR might be considerably higher. And if you don't know the questions to ask, it's a pretty big deal. So that's the first thing you'll see in terms of those closing costs. Some of the other costs are the appraisal charge. Now the appraisal, it's going to be somewhere around low $400 to low $500, depending on who you're working with. But that appraisal, it's different than a whole house inspection. The appraisal is basically for the investor that we're using, or for the lender ourselves, to know that the value of the property is there. They're going to look at 3 to 5 other homes very similar to yours, that are very similar in construction. They're located as close to yours as possible. It has that they sold as recently as possible, and they're as close in proximity as possible to your home. They want it to be a really accurate depiction of your house. Where a whole house inspection, they don't really care about value. They're more interested in, are there, is the furnace in good shape? Is there water in the basement? Is there, termites, or that kind of thing? So the appraisal is always going to be required. Now, some local banks will require you to pay for that appraisal up front before they even start your process. We generally don't. We'll usually just have you sign a document stating that if for some reason you get scared and walk away, that you're going to be the proud owner of that appraisal, not us. But usually that becomes part of your closing costs in the end as well. The next one is the title company fees, and we'll probably do another video for you guys explaining what exactly does a title company or a settlement agent do for you. But basically the title company is going to do a couple things. One, they're going to do a search of that property to make sure, all the way back to the first time that piece of dirt was sold to somebody, have all the bills been paid? If the prior owner had a new roof put on the home, but they never paid the person who did it, that contractor is going to get a civil judgment against them and put a lien against the home. And so the title company is going to search and make sure there's nothing like that floating around out there that could come back to haunt you afterwards. The other thing the title company does is, usually, depending on what market you're in, if you're in a title company state, you're going to go to the title company, and they're the ones that are going to take care of handling the closing itself. So if you work with our company, 99 out of 100 times I attend the closings, or someone from my team will be at the closing. That way, when we go, we still go over all your loan documents with you. We make sure if you have any questions, they're all answered. But with a lot of companies, the loan officers don't attend the closings. So in the event they don't, the title company will go through the closing package and all those documents with you. So those are the two main things that the title company does. The rest of it is, like we were talking about earlier, like the escrow items for your homeowner's insurance and your taxes and all that good stuff. As far as additional charges are concerned, one of the things that I like to point out to everybody in the very beginning is, On your loan, we're going to issue to you what's called an initial loan estimate. I mean, literally right at the point that you have an accepted contract. And what the initial loan estimate does is it's truly what it's called, is an estimate of all the fees that you might have. Now, keep in mind that whenever you have an accepted sales contract, we don't know who your title company or your settlement agent's going to be yet. So, because we don't get to choose who that's going to be, and they definitely don't let us pick what their fees are going to be. So once we get the accepted sales contract, we're going to reach out to the settlement agent. Usually the buyer's agent or listing agent will let us know who they are. We're going to reach out to them and we're going to get what's called a preliminary settlement statement. And sometimes we get that back within a few hours, sometimes it takes a couple weeks to get it back, but once we get that, it's going to tell us exactly what the title company's charges are. It's going to tell us if there's any tax prorations, any money coming from the seller for taxes, that kind of good stuff. So then somewhere about halfway through your process, usually we'll update that. But keep in mind, your final figures for your closing, they're not going to come until probably a few days before closing, because there's still a piece of the process where if there are any homeowners association dues or, prorated fuel charges, if there's a propane tank, just different things like that there's no way for us to know yet. We will not know it until the very end. So normally we are going to give you a worst case scenario of what those charges are. We use a third-party company that we don't really use often for actual title charges, but we've got the ability to click a button and it pulls in all their fees into our system. And they're all considerably higher than what they will actually be. So what we're disclosing in the beginning is usually at least a few $100s higher than what the actual cost will be, because I would rather call you 3 days before close and surprise you and say, hey, you're bringing $500 less than I told you. I'd rather do that than to call you and say, hey, it's $500 more than I told you, sorry. So we'll usually overestimate everything and then give you a really good surprise at close. Yeah, so that's pretty much the process. I know some of that can be a little bit confusing. So as I said, we'll post another video for you, which will be kind of the difference between, tax prorations and taxes being a year behind, that kind of thing, to explain that a little bit further. But if you have any questions whatsoever about your process or what you might be looking at when it comes to buying a home, make sure and reach out to us. We're available, including most nights and weekends, at 618-619-4120, or you can go to my website at applywithdougsshoe.com. There's a lot of great information there. And hey, if you, your friends, or family have anybody that needs some good, honest help, we would love to be there for you.
Have a great day.